In today's session, we're going to answer these really extremely easy questions. Extremely easy questions. How would you go about starting a cold storage position? How much of your total net worth should cold storage Bitcoin be? And how do you outperform buy and hold? Questions that have come up over the weekend. We're going to take a look at all of them together, give a very, very thoughtful approach to all of it, and then we'll go ahead and continue at it today. All right, everyone, let's jump into it. Let me clear the screen over here. And we are seeing currently Bitcoin trading at 95,500. I am seeing across my feed people selling Bitcoin. Michael Saylor just finished buying Bitcoin, acquiring another 55,500 Bitcoin, holding now 386,700 and Bitcoin. What was this purchase? Was this I don't know why it's not included over here. I'm going to say was it a $3 billion or a $5 billion purchase? And if Michael's done purchasing Bitcoin, who else is going to be on the bid next? We will see. Right now today, equity markets here. We're seeing NASDAQ currently almost unchanged on the day. Russell is riding high, and NVIDIA seems to be taking down the tech sector. We are looking at bonds going bid and putting us at an interesting place as we'll take a look. As on the open today, closes out our position that has ridden here ever since Fed began their rate cutting cycle. But we will get to that as it comes. Right now, let's just take a look at what's going on over here. And do you want to get into our positioning? Everyone should be really, really, really keenly aware of our positioning. But nevertheless, we know that only open position right now is Cardano, holding 170% position to the upside. A lot of people had different thoughts throughout the bear market. Bear market would be, and this is going to sound funny to you, but I'm going to say 2023. And 2022 during the bear market, that was fantastic. We were just crushing it, right? The volatility was still really, really strong. It began diminishing in the bear, but the volatility is strong. We're trading momentum. We're trading volatility. And Cardano, I'm not just talking about Cardano. I'm talking about all here, Bitcoin, Ethereum, Solana, Cardano. But specifically, Cardano in the bear market is a lot of love on the short side, attacking that weakness. In 2023, which is like the bear market for CTM, there was a lot of grinding in that historic low volatility, just trying to stay out on the right side. Bitcoin was very consistent. Ethereum, not so much, right? Just finally, then by the first quarter of 2024, roaring in the bliss. I'm sorry, that was November 2023. Then to go into its biggest drawdown since the halving, then back to roaring in the bliss. And some people wanted to give up on Cardano. And I was like, I love Cardano, how it fits into this puzzle, because when things are weak, it's really good to attack. And whenever we come towards the next run, Cardano's going to have triple-digit gains in it. Here, once again, I think that's proven correct over here, as Cardano now holding an open position 170% into profit. How do we begin? Where do we start? Let's just take a quick look over here. Never tagged my line. I guess my structure was off over here. I placed it over here off of March, and I placed it off of the top of the wicks and then where the bar closes. Now, one could easily also have included a line up off the top touches over there. That's for sure straight on. We did peak lower, and it's outside of my awareness. I'm just trying to see. Coming off of the low over there, then it was a perfect touch into structure. Again, that's not what I was looking at, but I do continue for the pursuit of perfection. And this wasn't perfect yet. Do you think the bull is over? Do you think it's over? I don't think so. I don't think so. Nevertheless, People are taking profits. People are selling Bitcoin. People thinking that maybe they're shocked from last cycle about where we are, or maybe that their Bitcoin awareness is just off, thinking that, well, it's going to follow 4-year cycle behavior. It's getting close to peaking right after the halving. I don't know when that will be, so I just want to continually take profits over here. I think that in the days ahead, we'll put out a very clear view of what's taking place over here as we enter the ultimate market opportunity for Bitcoin, as we pull out of the S curve into the early majority. Right now, though, we are seeing Bitcoin having trouble with the psychological whole number. Lots of OGs selling corn, taking profit at $100,000. Interesting to say the least. Let's start this off getting into some of the conversations about how you would go about starting a cold storage position if you did not have one over here. That's the question that came up. Look, I don't have a cold storage stash. And like probably others at CTM, could you give us some recommendations on how you could go about starting a cold storage position if you are in our shoes? Now, the things that we're going to talk about today, in so much as when we talk about how to start a cold storage position, more so when we talk about your total net worth, how much would you put into Bitcoin cold storage? Those things we'll talk about in general, but then we're also going to talk about them in relation to you and what it is that you do and what it is that you know, which is different from a lot of other people. I think that's the only way to go ahead and take an authentic look at that. So I guess this slide over here is going to come up next as we talk about total net worth. So let's start over here. And I saw this timely tweet, timely for this conversation, and it was talking about this guy who bought $30 worth of Bitcoin every day for 7 years, 10 months, and 12 days. Overall, he's now turned $86,370 into $1 million. Now, one thing that is different about this approach is that this person has taken the long-term view. A lot of people underestimate what they could accomplish. A lot of people overestimate. I was having this conversation at dinner with someone last week. They were telling me, someone that's very involved in commercial real estate, and he's like, "Look, Jordan, we're just continuing to buy, and we're buying for the long term." A lot of people, he said, underestimate what they could accomplish in 10, 20 years. And then I reminded him of the quote. People overestimate what they could accomplish in 2 and drastically underestimate what they could accomplish in 10 years. I think Bitcoin teaches a lot of people to think for the long term, but you as a Bitcoiner, do you think for the long term, right? And if you don't have a cold storage position and you're seeing Bitcoin now at $100,000 and you're saying, all right, I think I want to begin stacking a cold storage position. How could I do that? And at the end of all this, and this is important for when we think of Bitcoin as a percentage of your overall net worth, I think it is really important. I love the meme, the thought of thinking of Bitcoin as savings. I embrace that completely. It's how I think of it. Now, I don't think it's foolproof, but neither is the fiat that you save money in otherwise. But I do believe that you could ask anyone, what do you think if you had $100,000, 100,000 euros, 100,000 won? Imagine 5 years ago, won would have not been in that sentence. Point being, do you think that the purchasing power in 10 years will be more or less? And I think that anyone that I ask that question to, excuse me, will surely say the purchasing power will be less. And when you talk about Bitcoin and why it's not guaranteed, there's nothing guaranteed. I think that if you say to anyone, I know that I believe it, I believe the purchasing power of Bitcoin will be greater in 10 years than it is today. I firmly believe that. It's not guaranteed. One never knows. However, I think that most people would agree with that as well. So I think thinking along the lines of as Bitcoin as savings is the correct way to think about that. So if you don't have a cold storage position at all and you wanted to begin building one, I think that the first of all, you want to think long term. I think that this person here, when they began stacking almost 8 years ago and adding, $30 a month, it's like $900 a month they're adding to Bitcoin. Not everyone by any means has $900 a month, $1,000 a month to go ahead and to save. In this case, saving into Bitcoin. If you do I think that's a good thing to do? Unquestionably. Do I think that if you were to save for the next 8 years, $1,000 a month, $30,000 a day, that or $86,370, that you're going to turn it into 1 million? I mean, that's a different story. When he started stacking, the price of Bitcoin was significantly less. It was like January, I don't know, we'll get to the exact date, but it's close to January 1st, 2017. And the price of Bitcoin is roughly, we'll say $1,000, right? Just right around $1,000. And Bitcoin today is trading just off of $100,000. Do I think that you're going to be able to turn the same amount of savings of someone who started saving during the early adopter phase into the same amount of money in the same amount of time? I don't think so whatsoever. I don't think so. Anything could happen. It's the markets. We'll see what happens, but that would not be my expectations, is that you're going to go ahead and start saving $86,000 over the next 8 years, $1,000 a month, and turn that into $1 million. Could it happen? Absolutely. There's no question about it that could happen. Will it happen? That's a different story, right? So I hope we could all agree on that. I think that's very important in setting your expectations correct when you set it out. And just because you're going to start saving money on a regular basis, whether that is a daily basis as this person did, a weekly basis, and or a monthly basis, point being is that this person was able to achieve X in Y amount of time by you saving the same amount of money in Bitcoin for the same amount of time. I don't think that you're going to receive the same results that he saved, but that should be irrelevant. And you might want to think about, is that your goal, right? Is your goal to have X amount of dollars in Bitcoin? Or is your goal to have X amount of Bitcoin, right? Or is your goal just to save regularly, consistently? And I think that any way you look at this, if your goal is to save money regularly and consistently, and you're doing it, and then you have, this is 8 years. You see 8 years pass, 10 years pass. I think that you're going to see the fruits of that consistency pay off unquestionably. Let's take a look at, here's what he was doing. He was saving $1,000, right? What does this say here? Let's start with, or he started with, I should say, $1,000 a week, right? So, or a little less, 900, but we'll do $1,000 a week. So he's saving $250 on a weekly basis, right? And he's doing that for 8 years. All right. So hold on one second. We have no appreciation of price over here, but he saved $86,000. That's what I'm trying to match over here. 86,370. So let's try to get there exactly. $210 a week. Right there we go. That's close enough. And I know he did it for about 6 weeks under 8 years. We'll just go with 8 years over here. And this is what we'll use to begin our little adventure off of. All right. So we're matching now what he's done over that period. And you could say the same, that if you are to save $210 a week for the next 8 years, you'll save $87,000. What it'll be worth in Bitcoin terms will be a different obviously different. And for some people, this could be different. Maybe someone's saving $2,000 a week, or maybe someone is saving $25 a week. I think the important lesson here is not what he was able to turn it into ultimately, but that he's very consistent in his savings. And if you don't have a cold storage position at this point and you want to begin building one, I think this is a really, really good way to go. What happens if you had a bunch of money and you wanted to start, like you have in like a bunch of money sitting in your savings account and you want to start a Bitcoin cold storage position because you don't have one? I mean, so I think of all of you as early adopters. Most of the people have been with CTM for like 3 and 4 years. Some people 2 years. Some people just recently joined us, but most people have been around for a while. So I guess it's a little hard for me to understand why you would not have taken a cold storage position, but that doesn't matter. There's always today. And if you had X amount of money and you wanted to start, like if you already had like a big savings and you wanted to start a Bitcoin position, like how much of your total net worth do you think should be in cold storage? Now that's a whole different question. So I'm gonna start over here on this second question, and then I'm gonna pick up for the next question to get into the rest of this discussion. But I think that we are more or less being able to kind of intertwine these two. There are a lot of people out there, by the way, who are like still very skeptical of Bitcoin. When we talk about the early majority, it's still very early. We're not anywhere close near the late majority. I was listening to this video this morning, and I wanted to see what other people thought. This is like the iced coffee hour. Does anyone remember this guy, Graham Stephan? I remember during and prior to the lockdowns, Graham was this real estate guy who got really into YouTube and made a lot of videos, and he built an incredibly large audience. And then he does with like other influencers, the iced coffee hour. So he's talking with someone else his age who is an influencer in the finance space. And I want to hear the question that is proposed and then take a look at the answer.
Would you invest 1% of your net worth in Bitcoin?
Ooh, would I? I don't know at what point I would be comfortable doing that versus just putting it into the market, in even a brokerage account, into an index fund. I'm much more comfortable just throwing money into an index fund versus, well, what if that money could 20x?
But you could put it in a Bitcoin ETF.
Okay. So you're saying, would you put 1% of your portfolio into Bitcoin? And he's like, oof, I'm not sure. I'd rather throw that into an index. I think there's been a lot of studies talking about what a 1% allocation does into a 60-40 portfolio and how it smooths out the overall returns, beating a portfolio that was missing that 1%. Now, I think in all fairness too, though, that was when the price of Bitcoin, or including data from Bitcoin, as over the last 14 years, it's undergone this massive appreciation, outperforming everything else by factors. And I'm not so sure that that's appropriate when planning what happens going forward, in so much as even that, like, taking a look at what Bitcoin has done over the last, since March 2021. I mean, it's up 50%. A lot of people now are attracted to Bitcoin and being like, oh, it's at $100,000. 50%, that's not such a big deal. Now, obviously, if you would have made that allocation into, the bottom of the bear, and you're looking at, obviously, timing matters greatly. What is 1% a joke? I think 1% at this point, it's not really making too much of a difference. I would I would speculate that 1% of your portfolio in Bitcoin over 1% of of your portfolio into an index fund is obviously, in my opinion, over the next 4, 8, 12 years going to significantly outperform. I don't think that's a really good comparison to make. But I just want to point out, this is the part that I want to point out, is that if you do take a 1% position, the amount of volatility, now this is when added to a 60-40 portfolio, 60% equities, 40% into bonds, that it's increasing the overall portfolio very marginally, the volatility of that portfolio. Now, when you add in a 2% position, it's almost increasing the volatility by 5%. It's still very, very, very low in my opinion. But if you take a 10% allocation of Bitcoin, it's now really increasing that volatility of that portfolio. And that's definitely not always a good thing. If you saw Bitcoin go down in 2022, 76%, and you have a 10% allocation of Bitcoin in your overall portfolio, like you're feeling pain. And I don't think that's the goal of most people. Now, you're talking to someone, and the person that is just discussing how much of your net worth should be in Bitcoin cold storage with you, who in 2019 put 90% of his net worth into Bitcoin. So when people talk about degening, responsible degening, CTM style degening, I think I'm a little bit more apt to take on more risks than most people. And would I do that today? I don't have 90% of my net worth in cold storage by any means or anything like that. Would I do that today? You know, if I were a 20-year-old, right, 25 years old, just graduating in college, I would put literally for the next 10 years the majority of my savings into Bitcoin. I would think of it like that. This is CTM aside. What I'm trying to get at is I think that this allocation of what someone's net worth is has a lot to do with how old they are. Do I think that my mom should take a 90% Bitcoin allocation? And by the way, I know a lot of Bitcoiners who made a lot of mistakes going all in on Bitcoin. For example, back in 2021, there was like the meme, and it was like, you know, like you've heard of get off zero, where you don't want to, like, you cannot not own any Bitcoin. You have to get off zero. And then there was the people who believe that you should be all in on Bitcoin and all your net worth should be in Bitcoin. And that's really tough when you see Bitcoin come off 70%. And I know a lot of people, Matt Odell talks about how he was invoicing in Bitcoin throughout 2022. I mean, he got hurt. He lost a lot of money by doing that. I don't really think that's a good situation for a lot of people. Now, when my mother, a few years ago during the lockdowns and around that time, got very sick, repercussions from all that nonsense, and she needed assisted living. There was no one. We weren't able to take care of her. She needed full-time attention, and at that point, most let's say baby boomers. She's a baby boomer. Most baby boomers have their net worth in their house and in the equity markets. That's where they have most. She had to obviously sell her house. She's moving. At that point, my brothers and sisters, I obviously made the case of why she should take a Bitcoin position. They're like, there's no way. We need to make sure that she has X amount of money for X amount of time. Had she had done that compared to where she is now, I mean, obviously it would have been a lot smarter to do. So I don't think that the older you are, that like you should not take an allocation and position at all. Actually, I think it's very smart and prudent, but I think the percentage of someone's net worth that they put into cold storage depends on a lot. Amongst them, their knowledge of Bitcoin and the financial system. And I also don't think that someone, let's just say that is of excessive means. Let's say someone that has $100 million. I don't think that they need to take X amount of their net worth and have it into Bitcoin. I think that you take a Bitcoin position that you're comfortable with. There is some people, a lot of OG Bitcoiners who have basically said like, listen, you'll never, like, I'm just throwing out a number. I don't know the math behind it, but like 6.1 Bitcoin is all that you would ever need. Or maybe someone right now is trying to accumulate 2.1 Bitcoin, right? Like, I don't know that it needs to be at all times, or it should be thought of as a percentage of your net worth should be stored in Bitcoin. The way I look at Bitcoin today and its holdings has changed. I personally believe that, like someone said over there, first of all, I don't think of my Bitcoin cold stash as a percentage of my portfolio whatsoever. I took a long time ago, I took a physical gold and silver position, right? Which hasn't changed as over the last, 16 years, as my net worth continued to increase. I didn't increase that position. I took the position I wanted, and then I leave it. That's all. That's stored elsewhere. It's security, blah, blah, blah. I don't increase that position on a yearly or even at any other basis. And for a lot of people going forward, that might be the same for Bitcoin. I don't know that you need to keep like balancing that allocation at all, personally. Do I think that 1% is absolutely nothing? I think it's a joke, like you, Michelle. I agree with that. Do I think that someone should have a 5% or 5% of their net worth in cold storage? I mean, again, this is so variable. It depends how old they are, what their current situation is, what their savings are, what their income is, and what they're trying to achieve. But today, I think that's really, John. John, you have a lot of experience here, and as I get to the next section over here, we'll talk about that in a little bit. So let me just build back over here. Josh is saying he's 23. My friends sold over the last 2 years. They couldn't wrap their heads around a lifelong investment. I made a mistake when I was younger, in so much as buying the Facebook Meta IPO, buying the Google IPO. And if I would have just held those positions, that's it, those would have become significant. I thought I was a hero selling them up whatever. And I think people need to think long term. My uncle, he owned 2 newspaper routes his entire life. He retired very young. When I say very young, like 53, he retired a multimillionaire, and all he did was buy and hold stocks, long-term thinking. And I think the problem is this is not really discussed and taught in elementary, middle, high school, or university. The correct way to think about how you should be thinking long term and why. But I do think, from my own opinion, when Michael Saylor makes the analogy of Bitcoin to real estate, I do think so, in so much as that, again, many baby boomers, their entire net worth is tied up in their real estate in their home, which became a vehicle for savings. I do think that it's appropriate to think of Bitcoin along those lines. And I do think that those who have been part of the early adopters, or even now, just starting out, if you're going to build a position over the next 10 years, I think that over the next 40 years, you're going to be able to participate in the same way. And that I think that I don't think that you want to think of Bitcoin as an investment that you're looking, cold storage Bitcoin, that you're looking to sell. I think you're looking to buy it, to hold it, and for the long term. So whether or not at certain times that will obviously increase as a percentage of your overall net worth, especially during the bull markets, and then during sometimes it's going to decrease in the bear markets, I don't think that allocation should necessarily be changed. I don't change my allocation depending on what, like, in relation to what my overall net worth is at any time. So I don't know if that's the correct question to ask, and that's why I've tied both together about how would you go about starting a cold storage position. And I think that you should think of it as savings, and I think you should think of it as savings for the long term. So that's I think that is. I know it's not sexy. I know it's not exciting. I know that you can't make a meme of it, but that is the best way, in my opinion, to go about it. Now, I think it's much different from our perspective, though. And let me talk about that a little bit. So we were talking about that position. He started on the 13th. I said it was around $1,000, 2017, right? So, and you could think of it like this. If you start on that date, and he obviously was doing a little less, but if you're doing on a weekly basis, $100 a month, and you could say, well, over 8 years, this is the return on investment. Sorry, this is Bitcoin dollar cost averaging. Ignore that for 1 second. Let's move over to here. And let's look at it from the eyes of CTM. So, John, this is, what I view you not as a boomer. I view you as an early adopter. There are many boomers who are early adopters, and most boomers I know who are Bitcoiners, they are doing it for exact reasons that you're talking about. They understand, first of all, at this point in life, the value of time, of a long-term thinking. They also understand that time is going to come and pass, and they also understand what is happening to the devaluation of the currency and the inflationary pressures that their children and grandchildren face. I think it is an extraordinary noble role to be looking to protect their future. I think that's beautiful. Yeah, I don't know about Andy, those philosophical questions about what the intent was when someone built. Facebook was started as a college campus social network. That's not what Facebook is today. That's not what Meta is today. It's not even Facebook anymore. It's Meta, and everything will continue to evolve. And that's just normal progress. I don't even want to say evolve. It's just progress. And when Satoshi wrote the draft, the white paper, that was like at that moment in time, his dream of potentially what Bitcoin would become. And then that changed over the next couple of years as the network changed. Like Satoshi made lots of changes and continued to do so. And he had plans for the future of where he wanted to go and what would happen. So to get caught up on what the original idea was, it's just, Bitcoin has significantly surpassed that at this particular point in time. So I think that was a bit of a trying to narrative shift in order to launch forks. And it gets introduced into the psyche of everyone in the space. And then people have different ideas. And then people, it doesn't matter. It is what it is. And personally, I personally thought going back into 2019, Bitcoin between $5,000 and $9,000. Well, in a sense, from a risk to reward basis, I felt it appropriate with a house full of kids to take 90% of my net worth and put it into Bitcoin, especially approaching. And I laid out the thesis of why I was doing it well ahead of it happening. The original thesis I pointed out, talked to too, at that point, expectations of Bitcoin trading somewhere between 55 and 130,000. That was my original idea. And as time went on, that evolved. And then so did my expectations for that cycle. Everything changes. So I don't personally, I don't think that is the same situation today. And coming into this halving, and let's say Bitcoin was trading coming into this halving at, you know, it was trading higher, but let's just say 50,000, between 50 and 70,000. And I don't have the same expectations, or like the certainty, I should say, as I did back then of what happens next. And I think that's healthy. That's good. But anyway, well, I'm making notable notes here. I think it's important to all understand and paint the correct picture. But I do want to talk about now someone from our position who's looking to begin to build a cold storage position, right? And I think it's appropriate if you're building a cold storage position. I think you could do a lot better. I don't think that you're going to be able to do this. I don't think that in 8 years you can turn $86,000 into 1 million if you begin dollar cost averaging into Bitcoin. Now, I think that you could go ahead and make the probability of that return being higher very easily. Let's go ahead and take a look at, this is the Bitcoin bull runs. And he started over on January 15th, right? And let's say that I know that he did it at the time where it started with $30, right? So I can't use our formula, but he did it. He wound up putting in a total of, I'm trying to figure out how I could do that, and I can't do that. So let me just start with $1,000 then. All right. And I could say that by investing in the Bitcoin bull runs, right, you turn that $1,000 into 25,000. So I guess I can't, there's no way I could I can't do it like that. So let me try it like this. And I can't also at the same time say, okay, if you're starting with a $10,000 position and adding 10,000 every year, because he's dollar cost averaging on a daily basis. What I can say is this, that if I were talking to my childhood best friend, who basically I will be after this session, and I'm going to point him to this session, but he asked me last Friday, listen, this is someone who's gotten into CTM stocks over the last couple of months, and he's now on the daily being able to execute completely off CTM stocks. And he's now like, listen, I really feel like I'm missing out all the FOMO on Bitcoin. Someone who's held a position many years ago throughout 2020, 2021, larger position in Ethereum at the time, then into Bitcoin. And so it's not someone with no experience or knowledge, but it's not someone holding a position. And they're like, well, what's appropriate? Now, what I would tell him, or what I will tell him and or that person, is I think that it's appropriate to go ahead with that same plan, in so much as decide how much money that you want to save into Bitcoin on a regular basis. Again, for someone that could be, it could be $50 a week or $200 a month, or for someone else that could be $500 a week, or for someone else it could be thousands of dollars a month, depending on who they are, what their position is. That's not important. That's personal. What you want to do is come out with a consistent dollar amount and interval that you want to save. That's all that's relevant and important for you. Then I'm going to say the way that to go about that is, I believe, because look what the Bitcoin bull run does, obviously, right? All it's doing is taking, when the momentum is upwards, having you in the market, and when it's out, having you on the sidelines. And I would approach it to dollar cost averaging the same thing. Yeah. Let me get back into that in 1 second. I think the appropriate way to go about this is to take a position whenever the Bitcoin bull run takes off into Bitcoin. Now, this way you're paying taxes. Okay? You're paying taxes where when you dollar cost average just into Bitcoin, you're only paying taxes and capital gains when you sell the Bitcoin. On this in this route over here, there like throughout this year over here, you could say that like in 2018. Oh, I don't have the. Let me put up the. Okay. In 2018, obviously there's trades, right? Now, in this case, you're probably for the year slightly up and or break even, and it's not really a tax liability, right? So that's not really something to talk about or think about. But in other years, there are. In 2019 to 2020, you make some significant gains over here, and you're not paying capital gains because this trade is not opened for over 12 months, and you're paying your nominal tax rate on that. Even still, by paying your nominal tax rate and doing this for 8 years, I think that in my opinion, the data suggests that you'll drastically outperform what could be done than if you were saving Bitcoin for like the next 8 years and a certain amount, a 621%, which is what it was when Bitcoin went from 1,000 to 100,000. By dollar cost averaging into Bitcoin, $100 weekly, you're able to make a return of. So I want to get to the same what they had. So they were doing 900, 210 we'll do weekly. So they spent 76,000 instead of 86,000, right? And then the total is, why does that not work out to the numbers they have? The numbers they have over here is, I've been doing it for a little longer. Is that why? They turned 86,000 into $1 million. How could it be off by $500,000? I'm not so sure. We're a little under the total investment. Maybe that's why. So yeah, now we have 87,600. I'm not sure why, for whatever was happened here, or how this one is being calculated. So we'll let it go. And then you have other trades. For example, this trade here, which is going to be held for over 12 months. And that's the idea. The idea of the Bitcoin bull runs is to be able to get into a position and hold it so that you get to pay capital gains on it, and also to outperform buy and hold. But we'll get to that in a second. So you'll have cases where you make significant profit, as in 2019, and you're paying your regular income tax rate. And then you'll have other periods where you're paying capital gains. And it's all dependent on what happens. For example, since 2023, not a trade that's holding long enough, significant gains, but not enough to pay capital gains. Who knows about this trade over here that was opened in October? If this move is lasting, that's going to be one that pays capital gains tax. And in the past, like this is starting in 2017, right? But this trade opened up. This is a trade that I believe probably held, or there's other trades that hold up for over. There are other trades that have the duration to hold for capital gains. So I'm just letting you know that you're paying capital gains. But what I would do here is I would dollar cost average into an account, right? And even when the price is going up over here, I would just dollar cost average into stablecoin and or dollars, depending on how you're buying, on that same rate, right? And then every new and especially where you're out into just on the sidelines, and every new trade, take the trade. That's how I would go about it. I think that your chances of going ahead and dollar cost averaging over the next 8 years is going to produce and begin to build a Bitcoin position, but it's not going to equal turning $86,000 into $1 million, likely. But I think giving yourself the advantage of using something like CTM bull runs is drastically going to increase that. So I wonder, it could get very tricky for the accountant. So that's just why I wonder if when like you're into this position this whole year, if you should be dollar cost averaging into Bitcoin. So like, let's say you were using something like River and you set it up for weekly dollar cost average. I'm looking at that as like a giant headache. So I want to stay off of that. Could this premise be used for someone who's looking to take a Bitcoin spot position? Maybe they live in the US and they want to do it in a retirement account. There are companies that offer like Unchained Capital, not a recommendation of any third party at any point in time ever, that allow you to use a Roth retirement account and or IRA, and you could have the keys to that Bitcoin. So even though it's a retirement account, it could be done in Bitcoin as well. The trading fees on those platforms are rather high. They're about, let's say, 1%. So that needs to be factored in as well. But anyway, so just to sum up, I believe that if you don't have a cold storage position, then likely you want to begin one, and likely you want to do that thinking long term about dollar cost averaging and saving in Bitcoin to do that. As far as how much your total net worth should be in cold storage, I think that greatly varies. And for a lot of people, I don't think it was a good idea for people the last 3 years since like 2021 to be having their money sitting in Bitcoin, losing value the majority of the time, and or going nowhere and doing anything for 3 years. I really don't think that's a very smart approach. And just looking at that period over here with some, you could use just, our normal BTC 107. You could use our daily. Here we're looking at the bull runs. Obviously, like all this time out of the market throughout all that drawdown is a lot smarter and will take your purchasing power a lot further. Because when you're exiting here at 49,000, right? This is in and out. And then you're entering at the very bottom, 17,000, and then taking your full purchasing power for that gain instead of waiting 2 years, a year and a half to get back to break even. Obviously, you are putting your capital to efficient work and doing a lot better. So I think it's a lot different for people and those within CTM who are talking about what your overall net worth should be in cold storage. In my opinion, it's something that you have in cold storage as a simple hedge against the system breaking tomorrow. Like, and for whatever that is for you, maybe it's something like 3% of your net worth. Maybe it's something like 5%. Whatever it is, I think it's a lot smaller than someone who would identify as like, I'm a Bitcoin maxi. You can't time the market, and I'm good with my purchasing power declining and or going nowhere for 3 years out of a time. Because that's all I could do. I can't do better than that. So what I'm going to do is I'm just going to like hold my Bitcoin in cold storage, and that's it. I'm not touching it. Like, I think that's good for someone who doesn't know any better, but I think that is a very, very poor use of capital overall. And whether or not like the returns that you have access to within CTM and the potential, whether it's in stocks and or Bitcoin and crypto, doesn't make sense to have that same type of allocation in cold storage as someone else who doesn't know any better might have, right? So for me, and I think for many of you, it's significantly smaller. For me, it's just for protection in case something unforeseen were to happen to the financial system. Yeah, if someone had access to money, if someone was sitting in fiat and savings, even now with Bitcoin at $100,000, they need to obviously decide what amount they're comfortable holding. putting at the cold storage, never looking to, right? And looking to take a position if you don't have a cold storage position. But I think it's the best way to go about it is to have that consistent, timely savings on an interval. All right. I want to continue talking over here. And the question that came up was also buy and hold, right? And look, Jordan, I've been watching your tutorials, conducting backtesting on the scripts, and I'm not sure I'm doing it correctly. Using CTM2 from the bear market low, from the 15th of November 2022 up until the last trade, I've been getting poor results compared to buy and hold. 89% versus 260%. Am I using the backtester correctly? Did you get the same results over this position? What am I missing? Please advise. All right. So this is kind of where the Bitcoin bull runs were born out of, right? Because he's saying I'm using CTM 2.0. So before we begin, let me just give this little bit of a preface. I think that this should be over here. When you open up the dashboard, I think that it starts off with CTM 2.0 because it's what we built first, right? And I think over here, there should probably be an overview of the timeline of the development. And then after that, you come into CTMX, right? And by the way, and then lastly is the CTM bull runs. So maybe, because I'm doing it in chronological order. Obviously, the dates are put out when they are. And just a bit of an overview. Let me begin. This is beyond one person designing a system, but rather the collective contribution of the community we fondly refer to as the hive mind. It's difficult to comprehend the amount of brain power and man hours behind this, which is collectively simply immense. Our best devs, which are literally incredible, have come to understand the power of the hive mind. We simply out-design the machines even with their help. That may change in 2024, the year of the dev. I called it well in advance. Likely the machines can take us to vastly new heights. I predict it would be the year of the devs and is shaping up to be that way. CTM 2.0 was introduced March 14th, 2022. And on that day, I mentioned if there was a filter, it would make this the holy grail. Soon after, Reza introduced the CTM filter. That alone didn't make any improvements. However, in the months ahead, the hive mind customized it. Bitcoin, Ethereum, Cardano have used the stable version. It hasn't been changed. It's all forward testing since June 2022. All continues to forward test well. Extremely notable. Crypto during this period of time to experience historic low volatility. Even under the low volatility, it continued to outperform very well, which is adverse conditions for a momentum-based strategy. That's a big plus. And now we've seen as that volatility increase, and then so do the profits that follow. That was spot on. The only exception is Ethereum. The only time since June 2022 any adjustment made, we changed the stop loss on the buy side. We adjusted down to 3% in March 2023, forsaking at the time what was overall net return. CTM 2.0 for stocks was introduced January 2023, and in June of 2023 on the daily templates for FNGU, Tesla, TQQQ, right? All continue to forward test well. Unlike crypto, this is at favorable conditions. The CTM 2.0 for stocks daily was introduced July 2023. Then we had CTMX that was built. It was introduced July of 2023. Javier came on the community and dropped CTMX, built on top of CTM 2.0, completely built on top of it. And within that month, within 1 month, everyone inside CTM, we have produced our highly valued candidates. They were released August 2023. So now we're talking a forward testing of 16, 17, 18 months, all on CTMX. We know that CTMX is superior to CTM 2.0, especially in a bear market. On the sell side, CTMX is significantly better than CTM 2.0. As a matter of fact, you should not use CTM 2.0 on the sell side at all. We continue to forward test them, and we will forever, just because to have that history of forward testing and to see the results continue is just beautiful. Now, in a bull market, it remains like overall CTMX outperforms, not in every period. So if someone is using CTM 2.0 on the buy side for Bitcoin, Ethereum, things like that, in conjunction with CTMX, like a 50-50 allocation, that's a really good thing to do. And then on top of this, I think I need to add, when the CTM daily X templates on stocks were dropped, and then we're going to need to add, because we're getting close, it's been over a year in development, to drop CTM V3, all built on top of CTM 2.0, built on top of CTMX, and it's just the progression. So the reason I bring that up is because if you're looking, and first of all, I'm going to start this off with the one caveat that you're saying from the bear market low until today, buy and hold outperform. That's why we build CTM bull runs, because our trading will never outperform that. Here's CTMX. And this is, since 2014, it's amazing, actually. This is buy and sell side, right? So you're looking at amazing performance. Obviously, it's inferior to everything else. Look at just the long side alone. Let me take off the sell side. Obviously, it destroys buy and hold, but not from the bottom. So he's saying from 2022, from 11.15, like this is up 88%. Buy and hold outperforms. That's true, right? What happens though if I do something fair, right? What happens if I take the top of the last bull market and November? Because you're doing the bottom of the bear, and I just want to include the 1 year earlier. So you include 1 year earlier, and now you're seeing, all right, CTM up CTM 2.0 is up 274% with an 18% drawdown. And then if I look at what price had done, so 11.15, all right, buy and hold is up 55%, and you're up 274%. And instead of a 76% drawdown, you have a 19% drawdown. But he's just looking at this period though. And he's like, well, if I could pick the exact low and I could pick the exact high, well then buy and hold outperforms. Yeah, of course. But we don't know when the low is, and we don't know when the high is, and neither does anyone else, right? So that's why we did build though Bitcoin bull runs. Because if you look at the same period, so I'm going to start over here, and I'll start in off of the bottom that you were looking at, 11.15. And if you were able, so now you have, and he gives the exact return. So let me pull up to see the exact return. 260% for buy and hold. This is only 182%. However, it is holding an open position here of 50%. And if this were to close tomorrow and then you compound this to this, obviously Bitcoin bull runs is outperforming. It's outperforming. But better is, let's include the other period as well. Let's go back 1 year earlier to the top of the last bull. And now you're looking at Bitcoin with a 55%. See, this is really cool, because you're not seeing the return increase like you did on CTM 2.0 because it's trading the short side. Here, it's just preserving capital. And the truth is, there are not many other people out there who, in the top of this market, de-risk down. Most most people rode this down. They rode all of their purchasing power that from the high of just say 65,000, and they rode it down 76%, and then they got back to break even. And the difference of CTM bull runs is that you're on the sidelines. You're on the sidelines the whole time. You're on the sidelines the whole time. So that $65,000 worth of purchasing power, whatever your position is at the time, it's then put to full use here at the bottom. So this 164% is coming off of your full potential of your purchasing power rather than being up, because you don't know when the bottom is, or I don't know when the bottom is, and you don't know when the bottom is. So that's the difference. Knowing that if you could give the exact bottom to the exact top, that buy and hold will always outperform. And then saying realistically, obviously, nobody knows when the exact bottom is, and no one knows when the exact top is. So how could I put myself in a position where I could give myself the highest probability of being in the market for the longest time? That's where CTM bull runs was born out of and comes out of. It's not the same also with BTC 107. BTC 107, if you were to look at from the top over there, you can see that it's outperforming. We looked at CTM 2.0. 274% compared to 341%. Why? Because in the bear market, CTMX outperforms. So CTMX is the better template if you're trading both sides. And if you're not trading both sides and you're only trading on the buy side, well, then take a look at BTC 101, which is buy side only. And then we'll come off of the bottom. Which is almost the same thing as CTM 2.0. It was 189%. Let's see what or I want to know what the drawdown difference is. Drawdown and return are the same here. Amazing. That's beautiful in so much as that, look, that was our first, that was our white paper. That was Satoshi dropping his first draft, his white paper. Look how well it continues to form. But overall, and if you go over a longer period and you just use buy side only, and to show you, I'll come from 2020 till today. And this is just the buy side on CTM 2.0. You know, is that good to buy and hold? And then we'll show you the buy side only from the same period. From 2020. And instead of 1,200, you're looking at a gain of 2,600. What was the drawdown? 17%. It's not bad, but this is better. And this is just our progression into CTM. By the way, V3, which is soon to be launched, I mean, soon enough to be launched, it does outperform this. I mean, it's better. It's just, it takes this and then it's added money management to it. Meaning like when price is X percentage into profit, it moves the stop loss to break even. When it's X amount of bars in after the entry, it moves the stop. So it adds different money management to it. It's the same exact strategy, just with added money management feature. It's better, but this is pretty good. So there it is. I mean, you can outperform buy and hold if you know when the very bottom is and the very top. Nobody knows when that is, obviously. And if you're looking not to be trading, but to try to capture what is buy and hold, then you want to focus on the CTM bull runs and just the CTM bull runs, right? What's also interesting about this is someone else may say, oh, when CTM is in a bull run, I want to go to, maybe I have the opportunity to use my base account as Bitcoin, as coin, right? So the whole appreciation up, I'm in Bitcoin. And then someone may say, on top of that, then I want to trade BTC 107, right? So when I'm in Bitcoin as coin, and then I'm trading around it, like or maybe you want to do that instead of BTC 107, you want to do that with buy side only. Anyway, I hope that's helpful. Where did you get 2015? I don't know what was said. Let's come back to that. Let me know what you saw in 2015. We don't have anything for 2015 written over here. Michelle, if you could let me know, please let me know. What happens if you miss the bull run entry? Would you continue dollar cost average in the Bitcoin and in profit use the signal to exit? So, I mean, listen, if the thing about a mechanical strategy is like this entry over here, the latest entry on the Bitcoin bull run, I imagine that if Bitcoin does do Bitcoin things, that it's not exiting for a long time. And I hope that's the case. You know? It's possible it exits very soon, right? But it hopefully it doesn't. So what would I do if I'm not trading the Bitcoin bull run, right? Well, I would be trading probably BTC 101 on the buy side, right? That's what I would do. There was another one over here. So this is, I just want to highlight this because it's really important to discuss. Is that he thinks that CTM has the tools to be really capital efficient, right? Saying that the idea is your money is always working and never idle. It's much more efficient use of capital than it is to simply just be holding Bitcoin. It is. It's just much more efficient use of it. And it's really easy to illustrate to people if you point out that for this period of time over here, from for 1,100 days, price didn't go anywhere, and actually draw down 76%. That's a long time, 3 years, to not seeing your capital at work or doing anything. I mean, in those same years, in that same period, if you were to look at TQQQ is the worst performer. You're looking at, since 2020, an 870% gain versus like 3,200 on NVIDIA, versus like 3,700 in FNGU, or 4,800 on Tesla. So this is TQQQ over here. And if you were, for that same time period, from, let's say, March 2021 until today, I mean, it's a much more efficient use of capital, 9% drawdown, 300% return, than it would be holding in Bitcoin. And that's just looking at at TQQQ. The same holds over here for looking at, Bitcoin 107. And if you're looking at the same period over here from 2021, March 15th until today, 16% drawdown, 647%. Right? And what happens if it was just the buy side only? I don't trade the short side at all. And I'm not talking or looking for using the buy side only, which I know outperforms, but just this one is 300% compared to 55% that buy and hold is done during that time. So there's no question about it. It's a much more efficient use of capital, which is why I view it as like cold storage stash is just like a hedge against the system of something were to happen tomorrow that was unforeseen. If like there's a like tomorrow, there's like it's happened before. It happened in Russia, Vakanet. Do you know what year it was? Under Gorbachev, that overnight, basically the whole system changed, and you woke up, and then you had like, you know, if that were to happen tomorrow in the U.S., and that's when you would want obviously your cold storage stash. Otherwise, I think that you could do a much better job in that capital efficiency. (1992) Did anyone back then expect that was going to happen? Jared, right now we're looking at uh only Cardano as far as crypto into the market, and then you're looking at FNGU continues to hold this position, right? 14% into profit, and Tesla continues to hold this position 20% into profit. All right, everyone. A bit lengthy, but important. I hope you have a beautiful day, everyone. As far as fears in cold storage, and obviously your position in cold storage will warrant your security, but like at this point in time, 2014, 2024, obviously multi-sig and obviously different geographical locations for those keys. You're holding 2 of the 3 keys. You have a third party holding another key, and then don't keep the keys in the same place. You don't have to worry if there's something about a fire. As well, if there's a fire, you want to have that seed phrase potentially stored on metal so that it would be fire resistant. But you need to spend time researching and thinking about how to protect yourself when you're taking responsibility for ownership of your own keys. Thanks, Ace. It's been a minute, but eventually we'll get there. Thank you, Ace. Everyone, lots of love. Black Friday sale is very important reminder. They have, depending on where you're at, they have up to 70% off if you're going with the premium. Otherwise, on the plus, 40% off, 30% off in the end on the essential. All obviously very, very, very good deals. All right, everyone. Don't lose any keys. God bless you. I'll see you all tomorrow.